Now, some of the most profitable market traders and professionals have built systems around the saying, follow the trend. Now, it's easy to tell if a market's moving up or down or if it's moving sideways, but did you know the price only moves in clear directions 25% of the time? The rest of the time it's either ranging or giving off hard to deduce trends. Thankfully, there's one way to identify trends. It's a mechanical model that doesn't require indicators or trader discretion, and it's called break of structure. Hi and welcome back to the How to Trade YouTube channel. My name is Connor Wood, one of the trading coaches here. And in today's video, we're going to dive into the world of smart money concepts. One of the fundamental concepts is breaks of structure, labeled as BOS on the chart. Understanding market structure and the breaks in them are essential if you want to become a smart money trader. And if you stay until the end, you will know everything you need to become confident in this concept. So let's dive in. First of all, we need to understand the nature of how markets move. In other words, identifying market structure. Now, price communicates strength or weakness by trending or consolidating. In other words, the price can move in an uptrend, downtrend, or move sideways, and this gives us an indication of the strength in the market. It's important to understand price actually trends to get to a place. For example, if you're going on a marathon run, you go from point A to point B, but there are peaks and troughs in your pace along the way. This is the same for the markets. Although it can go from point A to point B, there will be setbacks along the way, but the overall goal is achieved. This is market structure. Okay, let's have a look at some examples now. As you can see, the price has moved from point A to point B in this example. However, it did not just move in a straight line, it had to trend along the way. By this, I mean the price has made higher highs and higher lows along the way. So from this, we can define an uptrend as a market making a series of higher highs and higher lows. Here is an example of a downtrend. It's moved from point A to point B, but it's been trending along the way. The market has made a series, this time, of lower highs and lower lows to get there. So you've now seen a little bit how the ways the market moves from point A to point B in either an uptrend, a downtrend, or in a consolidation or range-bound play. The problem is, can we spot it as it's happening? And to do this, obviously, we need to understand market structure a little bit deeper. And a really nice quote that I like to use is, we must work on an if-then basis. Now, what that essentially means is, if the price does X, I will do Y. So we don't ever guess what's going to happen. We don't ever guess on what our opinion is. We just follow the price action. So we consider then market structure to almost be our roadmap for direction. Let me show you an example in the live markets of what I mean. Simply, first thing we need to do, we're faced with this in the market, yeah? This is our price action that we're faced with. Okay, we've got our market structure high and our market structure low. Remember, if price does X, I will do Y. So we don't know whether the market's going to break high or break low. We've got no bias towards that. So let's just follow the price action as it plays out. Okay, straight away what we see a break lower in the prices. That means we can move our market structure low. Okay, so our market structure low is now here. It's gone from here, we broke lower. That's a statement of intent that prices want to go lower. It's not a signal to sell. Remember, that's really important to understand, is that it is what it is until it isn't, essentially. So new market structure low. So now what we're looking for is we're simply looking for, some sort of retest, whether it's a pause period, basically to create a new market structure high, a new higher low, to then move lower, because that's the market structure we're trying to follow at the moment. So what happens here? Price moves along, and you can see that we've broken to the downside. So we can now move this new market structure high to here, which is where the initial move of the next leg lower occurred. We play it through. Keep playing it through. Remember, we're just waiting for this market structure low to be broken. And you can see basically what happens here if I pause it. We're in a situation now where we're starting to, find this range bound. Okay? So we're now in this new range. Okay? So again, remember, if price does X, I will do Y. We don't know if we're going to get a reversal and a break higher. We just literally simply have to wait and see. what happens here? Okay, price is now broken lower. We're continuing the general downshift here. You can be as intricate with it as you like. You can move things, really, really steadily here. But I just generally take a more of a broader picture. So we're following. That's our new market structure high. Where do we base out in the markets here? New market structure low. And you can just see how we're following that all the way through. We're waiting for that new market structure low. We're looking for that pullback, and then we're looking for a break below the low to confirm the new bearish trend. Market structure high, new market structure low, and so forth. You can basically see how that happens, and we just need to just simply move those highs and lows down with it as we go. Wait for that break of structure of the low, then look for the retests. Bullish example, exactly the same. This is the situation that we've been painted right here. So, okay, let's mark our low and our high. This is the range we're currently in. We're currently trading in. It is what it is till it isn't. Okay, straight away, what's happened here? We've broken above. So we can now move that market structure high. We're now trading in quite a tight range here, or we could probably move that to here. This is our new market structure low. This is the new range we're playing in. What happens here? Again, we break higher, really, really clear to see. So then we can start to move our market structure low again to the next level. Where do we base out here at the top? Okay, new market structure high and market structure low. Let the price play out. You can just see how you can just follow that all the way. And then you can see what happens again is that we get this break of this market structure high here. So we just simply move that market structure high here. We've got a pullback. We've created a new higher low. I tend to use the wicks. Some people just use the bodies of the candle. I tend to use the wicks because it follows the whole price action story. And then again, we just simply follow it through until we see a market structure break, which you can see again as we follow it. What happens here? New market structure low, higher low, new market structure high. And you can just see how we're following that bullish trend as we go, and it plays through. And really just keep marking it. And remember, it is what it is until it isn't. And that's where we can get some reversals, which I'll have a reversal play for you as well. So as you can see, where's price going? It's trending to the downside, right? We're trending from A to B. You can see that the market's creating a series of lower lows and lower highs along the way. So let's mark our market structure high and low. That's the first step, remember, market structure high, market structure low. I'd actually suggest potentially saving this as a template. If you just right click on your trend line, and you can click save as, and you can put your figures in there. So market structure high, market structure low. We follow the price action. Okay, what we see straight away, and I'm sure you can spot that as well, we've had that break of structure here. New market structure low, new market structure high, exactly the same thing. We just keep following it. Looks like we want to continue to go lower here. So look, we've got this new market structure high, new market structure low. We just notice this in a minute there starts to be a change. Okay, right. So what's just happened here? This is our market structure low, market structure high. This is how we can spot those reversals. Let's zoom in on that. So what we now see is we were creating a series of lower lows, but then suddenly this new market structure low is a little bit higher. That's potentially a sign. This was the market structure high we had. What happened here? We broke above it. Okay, so we're now shifting towards more of a bullish sentiment here. Because if we play it through, broke above this market structure high, created a new high. We can then move that low up a little bit more. You can see that new higher low being printed there. Again, new market structure low. Has it done anything significant here? Have we broken to the downside or the upside? We're still trading within this range. So we now mark this new market structure low and we wait for the price action. Still trading in the middle. Okay, right, now then, what do we see? We see a new break higher. So that confirms to us, with a series of 2 or 3 new market structure highs and market structure lows, you can just see how that trend, how that market structure has changed from a bearish trend up towards a bullish trend, and then we can basically follow the price action as we move up, and we just keep marking those ranges as we go up. So we follow it, it is what it is until it isn't, and that's the most important thing to take away. This was a bearish trend until it wasn't, and all we did was simply follow the market structure and the price along the way to really get an understanding of how market structures can break. And there we have it, everything you need to know about how to study breaks of structure in the markets. Understanding this is one thing, but this video has shown you how you can implement that on real charts. Remember, always work on an if-then basis, and it always is what it is until it isn't. These 2 sayings will be your best friends when it comes to market structure, so write them down and remind yourself of them constantly until it's really embedded in your brain. Now don't worry if you don't fully understand this first time around. This is something that can take time to sink in, but when it does, it will be the backbone of your smart money trading. If you have found this video helpful, please give it a thumbs up and share it with other traders who you feel could benefit from this knowledge. Don't forget to subscribe and hit that notification icon so you never miss out on any future content. And there's also a link to an article on this video in the description below. Thanks for watching and happy trading.